if I were to give you the same question, I'd say to you, you can only back one horse. You can't back both horses. Your holding period's 2 years. Are you backing Bitcoin or are you backing ETH?
Same answer. I'm a very long-term time horizon guy. I don't change stuff around. And my thesis is when I look at the monthly chart on a log scale of the Bitcoin ETH Bitcoin cross, it's a big wedge pattern. I know what drives the ETH Bitcoin cross. It's driven by the business cycle and where you are in the liquidity cycle. We're at the turning point where we should start to see over the next coming couple of months, ETH starting to massively outperform. It's, I've written about this in several of my Global Macro Investor and Real Vision Pro Macro articles. And so it's just a matter of time to me. Now, how this works.
Raoul, the macroeconomic investor and founder of Real Vision, remains overwhelmingly bullish on Ethereum, despite Bitcoin's stronger performance in 2023. In a recent appearance on Crypto Banter, Pal explained why he maintains a 100% conviction in his Ethereum investment, even with Bitcoin's momentum and the highly optimistic catalyst of BlackRock's spot Bitcoin ETF application. He firmly believes that Ethereum will outperform Bitcoin by 3 to 4 times in the next cycle. For a comprehensive understanding of his views, be sure to watch the video till the end, where Raoul reveals his updated portfolio allocation, including the percentages of Bitcoin, Ethereum, and altcoins, along with his latest crypto purchases over the past 3 months.
How this works, Ran, is pretty straightforward. Let's say BlackRock ETF. Money comes into the space, money gets recycled, it flows into other stuff. These things have a smaller market cap and are less liquid, so the alts do that. It's the same that happens in emerging market stocks, credit, junk bonds. It's always the same. So as you move out of US treasuries into bonds, into emerging market bonds, the least liquid ones rally the most. So it's still got a while to go. So I think you're probably right. Another few months before we start to see the pattern base out and this revert. That's my best guess. And again, I'm so long term, I don't really care because I'm like,
I know you're not a trader.
Over time.
I know you're not a trader. I know you're not a trader. You're a much more long-term macro investor. But if you were a trader, would you go into Bitcoin now and then kind of wait for a little bit more of a run and then just watch the charts and then maybe switch into ETH, or is it just not worth the additional return?
There's been a bit of return. I mean, there's been 20% difference over the course of this year. So 20% is a reasonable amount. Does that trend continue ad infinitum? I don't know. Is there another 20% in it? Probably not. So if you want to move around some tokens for a 10% gain, go for it. But I just find, once you've just had a god candle like this week where it's up 20%, it's like the 10% extra. It's just a lot of hassle for a limited gain. Just the space itself as well.
Yes.
So regardless of the perfect wedge or not perfect wedge, that's a compression of a range. The moves that we've seen are small, right? That correction in the ETH Bitcoin cross has been small. Generally speaking, if you were to get a measured move from this, I mean, it kind of suggests that ETH does 2 or 3x Bitcoin in the next cycle, which also kind of makes sense. So really it's about when you hit the kind of crypto summer zone, ETH will outperform, it'll break the wedge, and then we'll see a much larger narrative around it. And so I bought Solana into the chaos of last year, both in June and then the FTX, the end of the year. And I think it's the same thing now, is like, if it gets another leg lower, it's a gift. Because of the points that you raise, is that the network activity is very good. There's a lot of activity going on. There's a lot of people doing stuff. So that's the idea for me is like, if we get better prices, I love it. I missed that last dip that we had, a couple of weeks ago. That was a shame because that was a gift when it went back down to 12.5, 13. My general view on this is I have no edge when it goes to smaller stuff. I just don't have an edge. I just don't have the ability to focus on it. I set up an asset management firm, Exponential Age Asset Management, to deal with this because that's a fund of hedge funds, and we invest in digital asset hedge funds because those guys spend all day, 24 hours a day, staring at the screens, looking at what the opportunities are. And it's better to give it to somebody who knows what they're doing than somebody like me who doesn't know what it's doing when you're going further out the risk curve. I just don't know. So it becomes a crapshoot for me because I'm just not as focused, for example, as you are in the space where where I'm really looking at those kind of opportunities because I'm a more macro guy. I've got some stuff, I've got some leftover stuff. I've got a bit of Matic. I've got a bit of, I've got some stuff, but it's not meaningful positions. It's really just to keep it on my radar screen, but I just don't have an edge. So I'm not that guy. I'm still 85% ETH, 10%, it's like maybe 80% ETH. The rest really Solana and a small amount of Bitcoin. I don't own much Bitcoin.
Raoul Pal has consistently held a bullish outlook on Ethereum, and that stance remains unchanged. He is still extremely optimistic about Ethereum, with a substantial 85% of his portfolio invested in it. Over an extended period, Pal believes that the wedge pattern of Ethereum versus Bitcoin will eventually break, and if it breaks to the upside, it could imply a 3 to 4 times better performance of Ethereum over Bitcoin. However, he seeks to hear from others about their preferences. Are you more heavily weighted in Bitcoin or Ethereum? Despite his conviction in Ethereum, Raoul Pal acknowledges that Bitcoin also presents a compelling argument. Factors such as the BlackRock Spot ETF application and the upcoming Bitcoin halving in less than a year contribute to its potential. In the comments, he invites others to share their thoughts on this matter. Additionally, Raoul Pal shared his outlook on the Federal Reserve and central banks, specifically concerning their decision to pause rate hikes. However, he believes they are bluffing and will raise rates twice more this year. Here's what he had to say about it.
I think we're done, but we need some proof of it being done. We need unemployment to keep rising, which it's doing. It always lags the cycle. If you look at inflation, we look at everybody looks at the true-flation numbers, and they're at 2.34% this morning, I think. So inflation is over. Core inflation always lags. So I don't know what battle they're fighting here. So I think the highest probability is that they're done. I think it's about expectations management. They really don't want people. There's a big narrative right now saying as soon as the Fed stop, inflation's going to go up, right? That's the most pervasive narrative in financial markets. I don't believe that narrative, but their job is to manage inflation expectations. So they want to do this hawkish, and they've done this before, the kind of hawkish pivot, which we're going to pause, but we're going to come back and beat you over the head if you dare think inflation's going to go up and try and price it. Now, that's not uncommon. Alex Gurevich wrote about this recently. That's a pretty standard way that the Fed operate. 2019, 18, when they paused in December, similar kind of narrative. It's like, we're watching you guys, we'll come back and beat you over the head. But every single time the Fed have paused, the next move has been a cut. 100% of the time. All of my forward-looking indicators show inflation is imploding. All of them show that unemployment's about to rise. All of them show that the rents are going to come down. All of them show that wages are going to come down. I don't see what everybody's talking about. People are just pulling up a chart of the 1970s and saying, oh, that inflation's going to come back definitely, because they're trying to impose a narrative. I think we'll feel the AI in the upcycle afterwards. I think unemployment will be stickier than people imagine. So employment growth won't come back as fast. So usually out of a recession, you kind of see unemployment rise and then comes back down again. We'll probably see that slower because of this job destruction by AI, that it's harder to get. And then we'll probably see new business formation picking up as people try and figure out how do I get employed, that kind of stuff. Because you can't go and work in an Amazon warehouse anymore either because they're employing robots.
Raoul holds a contrarian view, firmly believing that the worst of inflation is behind us. While he might not be entirely wrong, the dominant narrative in financial markets suggests that inflation will recede with a double peak reminiscent of the 1970s. Influential investors like Michael Berry share this perspective, which the Fed aims to avoid at all costs. Despite signaling 2 more rate hikes this year, the ultimate outcome will depend on the numbers. Raoul's thesis is supported by the inherently deflationary nature of technology and innovation, coupled with the growing impact of AI. These factors provide strong tailwinds for his perspective. We'd love to hear your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.